The crypto market is a battlefield right now. It's a war between bulls and bears. A constant tug-of-war where billions of dollars change hands in seconds, and in this battlefield, there's one hidden danger that's quietly waiting to strike liquidity pockets. Most traders don't see them, many don't understand them, but when they're triggered, they can cause a chain reaction of liquidations that wipe out positions in minutes, and XRP is sitting right in the crosshairs now. Before we break down what's happening right now with XRP, let's talk about what liquidity pockets really are. Imagine the market as a vast ocean of buy and sell orders. Some areas of that ocean are calm, low volume, little movement, but others are teeming with activity, packed with resting orders. Those areas are liquidity pockets. They can form above resistance levels, below support levels, and even in unexpected zones where traders set stop losses or take profits. Why are they dangerous? Because when price moves into one of these pockets, it often accelerates violently. It's like a pressure valve suddenly releasing for XRP. This means that a move in either direction could spark a cascade effect, where stop losses get triggered, positions get closed automatically, and the momentum builds until the move becomes unstoppable, at least for a short time. Right now, XRP is trading in a zone where these liquidity pockets are stacked like dominoes. Above us, we have traders who have shorted XRP, placing their stop losses just beyond resistance. Below us, we have leveraged long traders who have their liquidation points sitting under key support. The market knows this, whales know this, and they love to exploit it. Whales and big players hunt liquidity. That's how they maximize their profits with minimal effort. They look for where the majority of traders are vulnerable, push the market into that zone, and let the chain reaction do the rest. If you think the market moves organically all the time, think again. Large players use liquidity pockets as their playground. In XRP's case, there's a major liquidity pocket sitting around the 88-cent zone on the downside, and another one just above $1.15 on the upside. Now, this doesn't mean price will automatically move to one of these levels, but it does mean that if we approach them, volatility could spike hard. A drop into the lower liquidity zone could wipe out thousands of over-leveraged long positions. On the flip side, a push above $1.15 could trigger a massive short squeeze, sending price ripping higher as shorts are forced to buy back in. And here's where things get really interesting. The broader crypto market is also sitting in its own dangerous liquidity zones. Bitcoin has liquidity built up both below $58,000 and above $64,000. If Bitcoin makes a decisive move, it could drag the entire market with it, including XRP. This is why I'm watching Bitcoin's price action as closely as XRP. Institutional sentiment plays into this. Too large funds and trading firms understand liquidity mechanics better than anyone. They plan their trades around them. That's why you'll often see sudden moves during low-volume hours or unexpected breakouts in the middle of the night. Those are liquidity hunts. Now let's talk about what could trigger these liquidity pockets in XRP's chart. The first trigger is news, and with the Ripple versus SEC case nearing its final phase, headlines can drop at any moment. A positive ruling or a settlement announcement could send XRP surging into the upper liquidity zone, triggering a short squeeze. A negative headline, on the other hand, could tank price into the lower pocket, wiping out longs. The second trigger is macroeconomic, specifically interest rate policy. The next Federal Reserve announcement is looming, and if the Fed signals a shift toward rate cuts, risk assets like crypto could rally hard. That kind of momentum could easily push XRP into the $1.15 plus range, setting off the upside chain reaction. The third trigger, whales themselves. If large holders decide it's time to reposition, they can strategically push the market into these liquidity zones, knowing the reaction will magnify their move. This is the kind of manipulation that retail traders rarely see coming. If you're an XRP holder or an active trader, this is the moment where you need to think about risk. Over-leveraging in these conditions is dangerous. A 5% move can become 15% in minutes. Once a liquidity cascade starts, protecting your capital should be priority number one. If you're bullish on XRP long term, as many of us are, then holding spot and avoiding unnecessary leverage is the safest play while we're sitting near these danger zones now. Here's the bullish scenario. If XRP breaks into the upper liquidity pocket and a short squeeze triggers, the momentum could carry us past $1.15 and straight toward the next resistance at $1.35. If that level breaks, we could be looking at $1.50 in short order. The market loves to overshoot in these conditions, and with institutional sentiment quietly improving around Ripple thanks to the legal clarity narrative, this move could come faster than many expect. On the bearish side, a drop into the lower liquidity pocket could send XRP tumbling toward 88 cents, maybe even testing 75 cents if Bitcoin breaks down at the same time. That kind of move would shake out weak hands, but for long-term holders, it could be a gift, the kind of buying opportunity we may not see again for a while. Volume is another critical factor here. If we approach these liquidity zones with high volume, the move is more likely to break through and sustain. Low volume moves into liquidity can result in quick reversals. This is why volume analysis is key in these moments right now. The charts are showing mixed signals. Momentum oscillators, like the RSI, are in a mid-range, suggesting there's room to run in either direction. The MACD is flattening, showing that the current pause might just be the calm before the storm. And if we look at the order book, we can see those thick liquidity clusters just waiting to be tapped. The broader crypto market sentiment is also shifting. Bitcoin dominance has been dropping slightly, which often precedes altcoin rallies. If Bitcoin consolidates and money flows into alts, XRP could be one of the biggest beneficiaries. But again, that would require a break above that $1.15 liquidity zone to really kick off the fireworks. So, what's my game plan as a crypto influencer watching XRP closely? I'm monitoring these zones like a hawk. If we get a confirmed breakout above resistance with strong volume, I'll be watching for the short squeeze to unfold. If we break down below support, I'll be looking for accumulation opportunities in the lower pocket, and most importantly, I'm staying aware that news can drop at any second, changing the game instantly. To sum it up, liquidity pockets are both a danger and an opportunity. They can destroy over-leveraged traders in minutes, but they can also fuel some of the biggest, fastest moves in the market if you understand where they are and how they work. You can position yourself on the right side of the move, and that's the difference between being liquidated and being the one who takes profit when everyone else is panicking. XRP's chart right now is like a loaded spring. The pressure is building, the liquidity is sitting there, and all it takes is one trigger: legal news, a Fed decision, or whale manipulation, to set it off. The question is, which way will it snap? Up into a euphoric breakout, or down into a painful liquidation sweep? As always, this isn't financial advice, it's market awareness. The better you understand these mechanics, the less likely you are to get caught on the wrong side. And right now, in this stage of the market,